hide the scars that fade away the shake of. You wanted to. Why'd you leave the keys upon the table? You wanted to. I don't think you trust in my self-righteous suicide. I cry when angels deserve to die. In my self-righteous suicide.
Okay, so I think we can start. For those that still don't know, my name is Hightech, and on this live stream I will be talking about what is happening in crypto, what I think about it regarding my 11 years of experience here. I'll be explaining what Hightech meme coin is, mint address here, in the bottom section of the screen. And Jesus is king, and let's go. Let's start. Do I have everything organized here on the screen? Probably yes. Yeah, I think so. Yeah, indeed. Guys, if you have any questions, of course, don't hesitate. Ask in the music that was just playing in the background. The System of a Down, Chop Suey. I don't know how to pronounce it. I must check it. AI blues cover. Right? I really like this song. In its blues version, I don't really like it in its original version. So yeah, you can find it like that on YouTube. And yeah, what a day, yeah? What a day. It's just about to end in UTC time, 23:52. It is in UTC time right now, the hour, so less than 8 minutes to finalize this daily. And yeah, I'm very curious about Fear and Greed Index because the one from yesterday was 11, at least on CoinMarketCap. On alternative.me it was slightly better, I think. Where is alternative.me? Okay, I closed it. Yeah, yesterday there was outflows from spot ETFs, quite a lot of outflows, minus 1 billion 100, almost 165 million dollars, so that's quite something. And yeah, today we'll first of all, let me check the sound because I haven't checked the sound. Do we have the sound? Okay. It's just about to. Yeah, we do, so that's cool. So later on, first I will give you my brief review of what I see in the charts, what I see, going on. So I can close. And later we will see what the influencers see in crypto influencers scene is actually saying. We'll hear out. Da Vinci Jeremy. We'll hear out Lark Davis, Crypto Lark, and we'll see what they've got to tell us. After I give you my take, of course. And my take is, well, we are probably getting really, really close to altcoin season. I mean, given that QT is ending, so quantitative tightening is ending on 1st of December. That does not translate exactly to quantitative easing. What the hell? D/BTCD, it should work. Yeah. So yeah, this one is turned off because it doesn't really give accurate information here. So this is others dominance against Bitcoin dominance, and as you see, we have upward inclination here, which basically means, and this is correct. This is correct from, let's say, theory of free market capitalism. In free market capitalism, let's say a high dominance of let's say first mover. The first mover advantage should evaporate over time. So Bitcoin was, the first one of its kind. Later, other cryptocurrencies popped out. Now, literally, there is like, I don't know, dozens of thousands of tokens emitted every single day. But here into this picture are taken only altcoins listed on Binance. We know it with this parameter here, symbol equals Binance. and here percentage 3 ABTC USD. So this parameter tells us that we are just looking at altcoins listed on Binance, right, against Bitcoin dominance, also Bitcoin dominance on Binance. So here we see we are having this upward inclination, meaning that Bitcoin slowly but firmly, I mean, even though this range is so vast, it gives away, right? Its dominance, and it's perfectly fine. This is literally how it should be. And as you see, for quite a long time, we've been in a downtrend. Now we approach this uptrending line here that makes this entire market structure here. And on top of that, we have a falling wedge here. This is something what Kevin Svensson talks about quite a lot as well. Yeah, I actually, I haven't talked about it on my channel, but yeah, I'm aware of it. Kevin Svensson talks about it quite a lot, and it's legit. It's definitely legit. It's a legit finding, let's say, on the crypto charts, and I think there's a lot of merit. If you, based on that, if you think it's time for altcoin season, you're merit based, right? You're merit based, and it holds ground, as you see. I mean, from many angles, not only the chart alone, not only the falling wedge, not only the market structure, but also because of the nature of free market capitalism. And definitely, what else if not cryptocurrency works in that environment, right? Because, you know, crypto generally is pretty much unstoppable. I mean, yeah, of course, there is some, you know, regulation, the regulatory frameworks, you know, here and there. But at the end of the day, in the crypto, you really do what you want to do. It's not really that difficult. Nowadays, you know, since DEXs finally have enough of volume, have enough of liquidity, like thanks to Solana mainly, thanks to the concept of liquidity pools, which completely, you know, erases the problem, all of the problems related to building up an order book. That was number one problem before for DEXs, how to build up order book, because in order to have order book you must have people, but you will not have people if there is no liquidity, right? So it was a dead loop. Well, liquidity pools have solved it. So you have liquidity without the people, and that's absolutely amazing. On top of that, you can create multiple liquidity pools against the same asset, and then you allow arbitrage to happen, right? And you give incentive to write arbitrage bots that will be trading, you know, against different liquidity pools of the same asset measured against a pool of assets, right? So it just makes perfect sense. Bitcoin dominance, as we have seen, it has a little bit of a relief today. It's not what I wanted to type in. A little bit of a relief on the weekly. Also, of course, you will not see it on the weekly. It's a red week, and it probably stays that way. Will stay that way. So as I said on Thursday, since Thursday was red, highly likely the rest of the week will not be very funny. And on Bitcoin itself, it went down to 80,000, actually, to be more precise, $80,600 on Binance. I was not expecting us to go that low, but one thing I want you to be aware of that is that, you know, we have repeated very similar market behavior in the past on multiple occasions, and I think maybe, just maybe, it has been, let's say, spotted by too many people, and that means this time, even though we already have done it how many times, 1, 2, 3, 4, This is fifth instance of very similar market behavior. So even though we've done it 4 times already, now we had to do it in much stronger manner because too many people would benefit from it. Too many people, would hold their horses, would not panic here, would buy the dip up. And this is literally what has been going on, right? What has been happening. This is literally what people have been doing. They've been buying it all up, right? And this is not how the market works. This is a zero-sum game. Majority must lose. The market is always, very keen to less than 1% of market participants. All of the rest, it is very hostile towards them, and it has been like that since the very beginning. That is why you can make so much money here, because literally there is out of 100 people, there is 99 people that will finance that one chosen one, the chosen one. That's why you can make here so much money if you're on the right side of defense. So this is, I call it habituation. Also, so the longer you receive certain stimulus, the stronger it must be in order to give you the same effect as when it happened first time. So that's why we had to overextend so much to literally give us the same kind of effect, psychological effect, as for example here, right? It's not like it was gradually getting there, because that it does not have to. It all depends, of course, on let's say pauses in between, and the whole, let's say, market dynamic, the volatility that happens during that time. But yeah, apparently it was necessary. The liquidations went really sky high. I actually screenshotted almost 1 billion. Now it's $879 million on Bitcoin in liquidations, long liquidations, of course. Ethereum 391, but I screenshotted, it was almost at 1 billion right here. 964 million dollars. So pretty, very pretty, very decent, very decent. People were trying to long it on the way down, and that was obviously a perfect recipe for a disaster, for losing your money. I always tell you guys not to trade on leverage, because you will get wiped out. The requirements for precision there are way too high, definitely way too high. So yeah, but now, structurally speaking, we are sitting on a very strong support, a very strong level of support. If we break it, then we take out this low, then we have structurally speaking, we have first major lower low, and that screams bear market. Until that does not happen, I remain optimistic, I remain bullish, and I think we will come back up and we will make a new all-time high. And also, from technicals, one thing that tells me it's very highly probable right now is the disproportion we have in between the people longing the market and people shorting the market. Because since all of that retail that was betting on a bounce here got liquidated, now they are angry. They are angry at the asset, right? At Bitcoin, and now they want to short it, simply because they are disappointed with it, right? So now they got convinced. Okay. So you know what? Okay, we were wrong. They think they readjust to what market is doing now, but as always, their shift of when they do it is like way too late. Way too late. So that is why now they are making the herd. They literally, created the herd that will have to be slaughtered, because that's how it works, 10 out of 10. So you see, even on 7-day, the disproportion is very, very visible. And on 30-day here, it's like, what are we even talking about? If we come back to 97, around 98,000, there will be $2.5 billion liquidated. If we come down to 72,000, it will be less than $500 million liquidated. So, yeah, this is a no-brainer for market makers. I will say it once again, futures market is a betting market. So, and market makers, they make the result of the bet. They can literally create the result. They can bet on the market and make the result that makes them win. Create the result that makes them win, because they can pump the price and dump the price. So whenever they see so many people are betting on market dumping, they will open a long position, pump up the price, and scoop up all of this liquidity. And literally take all of the coins, all of the chips off the table. So yeah, I think you should be expecting a powerful long squeeze and a comeback above 100k, and we'll see what happens then. Am I right or am I wrong? You know, in the past I've been very right many times. Sometimes the market for months was going against what I was saying, and then it made up for it, and it not only, you know, satisfied my claim that it will come back up, but it also went much higher. Like for example, with S&P 500, there was a time for 3 months I was telling you guys here, don't worry, don't worry about it. We are not entering bear market. This is literally impossible. This thing that is happening right now makes absolutely no sense. We'll have to go higher, and we'll have to make new all-time highs. And it was here. It was here. We're going down for 3 months, right? And it was still before we breached all-time high from 2021. At the time, the all-time high from 2021, right? And you know, like literally when we were here, people were saying, no, this is the bubble pop, and we will go below COVID lows, so below this level here, right? So look how huge of a disaster that would be, right? Below. Huge reduction from those levels, and from the top that would be like minus 60% reduction. And I was very consequently telling you that's not going to happen, and we came back up and we went to new all-time highs, right? And so this time around, looks like crypto market was influenced by TradFi once again, because you know TradFi was dumping. Although was it dumping? No, it actually wasn't that. It wasn't dumping. It was dumping. It wasn't dumping on today's trading session. It was dumping on yesterday's trading session, as you see. But yeah, it motivated the moods before TradFi opened, and it was probably due to Japanese carry trade, because you know the Prime Minister of Japan, and now she decided to give stimulus to Japanese people, stimulus checks. So she is injecting a lot of liquidity into the economy. So people, of course, fear inflation, so they buy Japanese bonds and long-term bonds, and that strengthens the yen. And you know that the West borrows Japanese yen because they pay zero interest rates, right? So what they do, they borrow Japanese yen, and they buy, let's say, American stocks, and then it becomes, in perfect conditions, it becomes self-paying debt, right? The problem is when Japanese yen strengthens for whatever reason, right? So that's literally what have happened, and all of those borrowers, they started to get margin calls, right? And in order to refill and demonstrate that they have liquidity to pay off the debt. They had to sell. Many of them they had to sell their stocks. So that's why that created a selling pressure here, and that dragged Bitcoin behind. Then people started to long it in big numbers. Market makers saw the disproportion of of how the market is betting. So it was other way around as what we see now, and they were of course using that opportunity to its fullest. So it was a combination of things. Sigma Plus says, hey Sigma Plus, don't forget to subscribe to the channel if you haven't done it yet. By the way, for those that don't know, I live stream multiple times a day. Usually, today this is my first live stream. Usually, I live stream twice a day, or even thrice a day. So if you like this format, if you're vibing with me here, then subscribe to the channel. And if you have any questions, ask me in the live chat. Of course, like I said, I've been 11 years in this field, in this space, so I probably know a thing or two about it, right? And I'm full-time crypto, right? I've been full-time crypto for 10 years already. And by the way, if you haven't known about it, you can actually invest in this YouTube channel and my other social media through high-tech meme coin, right? High-tech meme coin is a coin that I have chosen as, let's say, indirect stock market of my social media. And literally whatever income I get from my YouTube channels, it will be redirected here. So I'll be doing buybacks of this token whenever I can, or I'll be just whoever wants to pay me for whatever on the channel, I'll be telling them to, and I've been telling them to simply buy up this token and burn it, or send it to an address without private keys. I actually generate one address that has no private keys. Nobody knows what the private keys are for that address. And eventually, if somebody does not know how to burn token themselves, then I tell them just send it there. I mean, so far, I had no one has agreed to that deal, but sooner or later, let's say businesses and companies will come because they will want exposure on my YouTube channel. Because even though this YouTube channel has very little subscribers for now, it's still watched by around 5,000 people per month. So that's quite something. And my big YouTube channel, which I run in my mother tongue, is watched by over 20,000 people every single month, right? So that's definitely some quite a busy street to put your banner on the side. So yeah, I have zero doubt sooner or later someone will accept my conditions, and then it will all start here, because crypto businesses they overpay. They overpay like 10 times. By the way, okay, I lost the live chat window. So yeah, what else I want to talk to upon here? Okay, let's go to others channel. Chart. So here, apparently, because I've been saying that since the 10th of October that after this dip here, we will get a secondary dip, right? But I also was telling you guys, we cannot really know which one is going to be it, because those things you can always tell only after it's like long behind you, right? So I was speculating that it could be this one, it could be this one, it could be this one, but apparently looks like it's this one, because this one is the deepest right now. And it usually, it pretty much always happens like that. Whenever there is a huge crash, and you have a recovery, a little bit of a sideways price action, and then a secondary dip, and then you get off to the races. So, I mean, if something really bad happens fundamentally, then maybe this is not over yet, and maybe altcoin market will keep bleeding until it goes much lower than this. But so far, since we hold that support zone in between 195 and 150, I remain optimistic. Right, it has been working quite well for us throughout last 2 years. I'll definitely start to become concerned whenever we go below it and we struggle with going back to it. Then you will see me flip, right? It's not like I'm never a perma bull. I'm never a perma bear. I have awareness that whenever you try to treat things on daily or weekly, you have to give quite a lot of let's say space for price action noise, quite a lot of margin for price action noise, because this is a very volatile market. So unfortunately, in between I'm bullish and I'm bearish, there is quite a lot of movement that you have to eventually stomach. But yeah, I from time to time, when I see my market structure change, when I see crucial levels of support or zones of support breached, then I have no problems with flipping the script. But so far so good. So far so good. I think it's much more reasonable right now to actually bet on this market recovery rather than a further decline. Even though I could be wrong, I could be perfectly wrong. It has happened in the past. I mean, me right now, I'm not in the Bitcoin market. I practically do not have any allocation in the altcoin market because my systems have closed all of my positions. For those that do not know, I do not trade manually. I have my systems from it that I have written, and they served me very well over the years. And I generally advise, if you know at least a little bit of programming, you should not be trading manually. You should forge your strategy and let your systems, exercise it. If you know how to do programming and you still do it manually, then you probably don't have a strategy. You just you're guessing what the market is about to do, and that is not going to bring you a nice ending. And especially if you trade on leverage or on futures market, then it's just a matter of time before you lose all of your money. Let me tell you, it's mathematically pretty much impossible to stay afloat in futures market. Too little margin of error, way too little. So here looks like this downtrending line is giving us support. Bitcoin looks slightly like it wants to bounce back up, especially on smaller time frame. Looks like it's gearing up for a larger move here, right? This we could name it an ascending triangle here. So that's a bullish market behavior right there. And after a huge sell-off, at some point it has to happen. So we are sitting on a very strong level of support. We had somewhat really unreasonable sell-off that has been motivated mainly by S&P 500, probably caused by spot ETFs. Where is it? Here. Because as you see, yesterday there was quite a sizable sell-off on spot ETFs. Yeah. I mean, yesterday in UTC time, right? Quite a sizable sell-off. Am I right? This is 20. No, it's 22, 21st. No, sorry. So this was today's Saturday. 21st was on Friday. Sorry, on Thursday. On Thursday. This one is from Thursday, right? So spot ETFs were selling off, and probably that did the job here. Because remember, the BlackRock's, Fidelity's, Vanex, they don't buy Bitcoin. Their customers do, and their customers usually are boomers, and those guys, they treat S&P 500 as the leading indicator. So whatever S&P 500 does, if it moves up, they will be buying Bitcoin. If it moves down, they will be selling Bitcoin. That's how they proceed. So that is why we have somewhat stronger correlation right now, because this market is much less liquid than most of major stocks. So it only helps the swings, and then market makers, join the party, liquidate longs or shorts, depending on where the price is actually going. So that's why we have that additional volatility here. And spot ETFs, they acquire quite a lot. They accumulate a lot of capital. So when they panic, you can it cannot go under the radar. You cannot not notice it. Let me check live chat once again. If you guys have any questions, of course, let me know in the live chat. If you have any doubts, let's say, or maybe I don't know, maybe you have some interesting info to share it with me here. That would work too. And don't forget about high-tech. About high-tech meme coin, that's literally investment gateway to this YouTube channel. And every single Friday, I almost forgot. Every single Friday, I choose one high-tech hodler to send them one full high-tech. And this is literally what has happened today on my Polish YouTube channel. I posted this material here. Let me play it. So this is second Friday. I'm sending one full high-tech. First was on November 15. Second, it was just today. Let me play it to you. Let's draw a random Solana address from high-tech hodlers. We'll use Grok to choose one, and let's see who wins one entire high-tech. So there is, theoretically speaking, 51 participants that satisfy the requirement of 0. Yeah, you must have 0.1 high-tech in order to be eligible. Addresses with less than 0.1 are not taken into account. So that's one thing worth to know about, but they are not required to hodl it. Like if for whatever reason you don't like to have high-tech on your Solana address, then you can just buy it for Friday, just for this moment where I draw one random address, and then after, if you won or you didn't, you can sell it. I have literally zero problem with that. 0.1 high-tech, but 4 of those accounts here, I mean, they are not the adequate people, because first 2 addresses are mine, and second, another 2 addresses belong to Radium Vault. So that's, yeah, out of these addresses, 2 are mine and 2 belong to Radium liquidity pool. So that is why it's actually less than 51. It was less than 51 participants in this lottery. So the chance of winning it was really, it was 1 out of 47. So really high for a lottery, of course. That's 51 minus 4. So if those addresses are chosen, then I will spin the wheel once again, and we will select another number. Of course, I will know which account, which address is mine, and that's the potentially the only complication that we can stumble upon here. Okay, so let's ask Grok from 0 to 51, right? Yeah. Generally on my Polish YouTube channel, I speak Polish, but just for that I've switched to English so I can post it, all around my social media, because most of my social media I run in English. Only my Polish YouTube channel I do not, of course, and it's my biggest media for now, so that's why I do it there. And most of my hodlers are Polish, so for now I do it there. Once this channel outgrows my Polish YouTube channel, then I will switch with um, doing the process. I'll switch to English YouTube channel. Ah, yes. Select a random number from 0 to 51, excluding 0, but including 51.
27.
27. Let's see 27. Who is 27? 27, is that me? No, this is not me. 2.22. Okay, so this is not me, this is not Volt. Actually, it's this here. So let's send. Yeah. Next. And we send. All right, so now it should be 3.22 high-tech here. Let's see. You have to refresh a couple of times. And there it is, 3.22. So congratulations to the happy winner. I have no idea who that is, to be honest, even though the circle of high-tech holders so far it's not really that vast, but definitely congratulations. So yeah, so that's how I select one high-tech winner every single Friday. You must have 0.1 high-tech on your Solana wallet to be eligible. And as I previously mentioned, you can just acquire it just for that, for Friday, for that lottery participation, and later you can dump it and repeat it literally every single Friday. Yeah, chances of winning are really, really high because there is just very, very little people participating, and one high tech costs now $76, so not bad really. To win to win $76 just for just because you own a tiny amount of the token, I think is quite a good deal. Even to have a chance of winning every single Friday, I think is quite a good deal. So yeah, probably we'll have a little bit of upward price action here throughout the weekend. We'll see if it holds on Monday, because that will probably create the CME gap again. And Bitcoin market does not like to leave CME gaps behind. It does it from time to time, but generally speaking, it doesn't like to do that. And it goes, it comes back for them. It will probably all depend on how much volume we'll get here, but do not expect people to flip bullish from here. I think that will be even a bad sign if they flip bullish. I think people should remain bearish, because that will not overload this market, that I will allow it to stay light and will not give it high resistance in the order book on sell side, because then whenever more people own the asset, there is more sell offers in the order book on sell side, and the more difficult it is for the price to climb up, because it just encounters more resistance, right? So while people are scared, they're not buying, there's very, very few offers to fill up, so price can move up with little steam and huge jumps quickly, and then market makers will be making money liquidating the shorts in the process. So I think that's the most likely scenario right now. Okay, let's take a look at crypto fear and greed index. Oh, this one actually looks still 11. I don't believe it's still 11. Okay, let's take a look at alternative.me. Where is it? Here it is. Also 11? Hold a second. From what day? Last updated November 22. Okay, so it's from today. So yesterday was 14, yeah. I get confused sometimes. Okay, apparently it's 11. So it's low. I mean, we've seen lower, but not much lower. But it's definitely low. So that's a good sign. That's a good sign that the sentiment does not come back too quickly, should not come back too quickly. That would be a bad sign if it does it. And yeah. What else I want to... Okay, maybe let's take a look at gold. PAXG is tokenized gold, if you didn't know that. Let's see, is gold dumping or pumping? It's actually... okay, it's not having the best of its time. So that means the TradFi market is not panicking. It's not really panicking. So that's good, because when TradFi panics, they buy up gold. So yeah, that confirms my assumption, my theory, that what happened on S&P 500 was Japanese carry trade, and the situation that of Japanese economy, it just fueled a little bit of a sales spiral. But that's probably already over. I don't think it will continue. I think those that were a little bit over leveraged already have withdrawn from the market, and now it will stabilize. And on top of that, here is a very interesting material of Meet Kevin. I don't know if you know Meet Kevin. I highly encourage you to subscribe to his channel, and he's a very, let's say, like business focused, economics focused YouTuber. One of the biggest, over 2 million subscribers. And to be honest, not without a good reason, because he's really good. And he, as he has committed a material titled "The Fed Just Bailed Out Stocks," and I think it's worth to actually hear him out, especially first minutes. Where is it? Okay, let's click it like this.
Here's how developers at...
Sorry for that. I do not use ad blocks for security reasons.
Nerve-wracking. And the last few days have been nerve-wracking. And on our jobs release day, we actually got pretty decent jobs data. We mentioned that there was one thing that can help alleviate some of the pain. If you go back to my 5:30 a.m. live stream, you'll see that I mentioned the Federal Reserve has until next Friday to do something for us. See, the Federal Reserve might not quote-unquote care about stock prices, but the Federal Reserve does recognize that if the stock market falls in a weak economy, you can actually induce a recession through a stock market decline. It's exactly what happened in the dot-com bubble. We didn't have underlying economic issues. We had a stock market that created underlying economic issues when the bubble burst. Now, the Federal Reserve wants to make sure we don't go into a recession. That is really bad for unemployment. And it's really hard to get those jobs to come back, especially in the day of AI, or the days of AI. So what happened this morning? Well, after the market's been selling off and selling off and selling off, sure enough, this morning, the Federal Reserve is unleashed to prevent a continuation of the dip. And just this morning, we get John Williams telling us that, hey, we should actually still be cutting in December. Now, it's not worth really listening to what they all say, but what matters for Williams is even though he's a dove, he's a voting member of the FOMC, and he's a mid-range dove. So he's kind of a centrist. He's like 51-49 on the dove.
So as you hear, Federal Reserve has assigned one of its members to give a little bit more clarity and actually a confirmation about the Federal Reserve cutting rates. And we quickly check Kik, how Kik is doing, because I also live stream on Kik. I've got 52 followers now on Kik. I didn't even know that. I haven't visited it for a very long time.
Dove tilt. He's not like mega dove like Myron, who's going to tell you we should always be going for a 50 basis point cut, because that's what Trump wants. Although Myron has really shaped out to be a pretty good member of the Fed so far. I think he's got very transparent ideas. And
Jerome Powell once said that rising inflation will not stop them from cutting rates, and I think people have forgotten about it. So now they assigned one another guy that usually is a centrist. So once he flips dovish, hawkish, and putting him like this, on the stage, they reassure the public, reassure the market that indeed Fed will cut rates in December. And this is how I understand it. Because why would they do that? Why else would they do that to Jerome Powell? I already said what will be happening, and people are still fearful. So it's like kind of a reminder, kind of a thing to calm people down and tell them, see, this guy, he also says we should be cutting, and he's one of those folks of the board that could stop it if they wanted, but hear him out. He doesn't want to go against cutting rates. So yeah, that's why, like I said, it's quite worthwhile to listen, hear out Meet Kevin from time to time. I think because he throws things like this into his material once in a while, and it's quite interesting. It's quite interesting, and his commentary usually is also pretty good. So yeah, I don't think we are up for a bad December. Ending QT rates will be cut. So we already after huge sell-offs that were unexpected. Market is oversold left and right. Altcoins are as oversold as it can get. I mean, all others, when we go over to large time frames, let's say, and we look at this formation, which is obvious head and shoulders formation, it has a potential of reducing this market to 2002-2023 bear market levels. But as long as we hold this band of support, I think you should not be overly worried about it. When it will be time to panic is if we go below, and like I said, still we struggle with a comeback. We get rejected from this band of support, because then it will become a band of resistance. So that will highly likely be a harbinger of further decline. And yeah, it will be good just to step aside for that time, because highly likely it will not happen in a very friendly manner. It will be a very sharp decline, something among those lines here. It was a very quick trip, but then again, not too long after that, we will see a very, very nice release, because it will be easy for that market to grow from those levels. So yeah, the whole trick will consist of just just don't get trapped in that move down if it happens. But like I said, so far I think it's way too early to expect anything like that. There is not enough of evidence in order to believe that is going to be the case. Fundamentally speaking, also I think it makes zero sense to expect that. And as I was showing at the beginning, BTC orders against BTCD, I mean, sorry, not BTC orders, orders dominance against Bitcoin dominance demonstrates that the altcoin market is having upward inertia against the Bitcoin market. So that could mean we'll see some sort of capital rotation from the Bitcoin market to the altcoin market. And since we are already so strongly reduced here, it, at least in theory, should give us quite a pumpy environment. So yeah. Okay, let's take a look at what other YouTubers have to tell us about the current situation of the crypto market, because I'm curious myself. Like, what's the sentiment? What are the forecasts? I never, base my decisions on whoever is saying, because I have my systems, to trade for me. I never touch there anything, because that would quickly, convert into a huge disaster, financial disaster to me. But yeah, what I want to measure here is the sentiment, how bad the sentiment is. Hopefully, it's the worst possible. Let's see.
Portfolio today and felt physical pain. Look, you're not alone. Bitcoin alt. If you opened up your portfolio today and felt physical pain, look, you're not alone. Bitcoin altcoins are getting smashed harder than at any point since the FTX collapse. A lot of altcoins are actually under the FTX lows. The scary part, some of the sell-off might not even be about crypto, maybe more about the US stock market, and fears arising over 50 different things in the AI market. So given the health of our crypto markets are somewhat tied to the health of the larger equity markets, today, let's dive in to the big boy, the big daddy of them all, the S&P 500. Boo, boring lark, I know. Stick with me, it's gonna be important, okay? We'll take a look at what's happening on the charts technically, okay, from technical analysis perspective. Then we're gonna line up some bullish and bearish arguments from some of the biggest names, leading market experts out there, okay? This is gonna be a real interesting one, so make sure to strap in. We're gonna have a good time. Finally, we're gonna be talking about kind of conclusions we can actually try to draw from all of this noise to get a bit of signal. Let's get started with the technical analysis. So zooming in, just here a little bit on the daily, I think the major thing to watch right now is whether the S&P 500 can
Isn't it funny that the crypto space starts to focus on S&P 500?
continue to hold above 6,550. If the S&P can stay above this line, and by the time you see this video, you will know the answer to that or not, okay? We're recording this about 2 days in advance. If the S&P can stay above this line, then it will have an opportunity to consolidate and shoot for a higher high. However, if we lose that line, that means we're putting in a fairly major local low, which then starts to beg the question, the fear creeps in. How low can we actually go? Now,
And listen, we actually can track it live, which way it goes on SPY. So right here, this is a tokenized version of SPY. SPY is a trust fund reflecting what S&P 500 does. So we literally have a look into what TradFi does on the weekends. Like, what are they planning? What are they planning on Monday throughout the weekend, right? So far so good, as you see. Friday has closed well green. Now we are in Saturday. We don't really see any selling pressure. So far a little bit of red here, but that's nothing just yet. I mean, this daily has just 44 minutes so far, so it's a very, very young daily candle. But yeah, we can track it here. So that's I think as a tool, SPYX is very, very useful, and it practically pretty much every single time it tells you since I have been tracking it every single times, it told me what the opening is about to be on Monday on S&P 500. So here I told you. Remember.
We're on the weekly here, but the ultimate point I want to make.
Sorry for that, guys. As I said, I don't use AdBlock.
Is that the S&P 500, and you could say the same for the NASDAQ 100 or the Dow Jones or the Russell, whatever.
Guys, don't forget to subscribe to the channel. If you watch it live, subscribe to the channel. I live stream every single day, and give my commentary, chats on other crypto folks.
They generally like to take 3 steps forward, 1 step back. Therefore, you generally want to be long on stocks all the time and just add more on dips, except in the face of huge corrections or bear markets. What I'm showing here from 2022, it's an example. One of the best ways to spot these larger corrections is noticing a pattern of lower lows and lower highs on the chart, aka a downtrend, okay? That's why I'm emphasizing right now this 6,550 price point, because closes below that start to become very problematic for the charts. It begins to print larger, lower lows, which is a red flag that needs to be paid attention to. Now, zooming back out on the weekly since 2018, I do think we have a major support trend line that starts from the COVID lows and connects with the 2022 bottom and almost connects with the 2025 tariff bottom. So that line is coming in as support at 5,050. Now, if we get down there, hold on to your butts. It's not going to be pretty. Concerning major resistance lines, it feels a bit arbitrary on this chart to try to find a good fit, but there might be one from the 2018 top to the 2021 top, and you can see that trend line is splitting through our price action right now. So it'll be interesting to see if we get some closes above or below that line. But overall, this chart definitely on the higher end of the range, isn't it? A little bit topishy, at least short-term local top, not like macro top for the centuries, right? But if you add on the RSI, you'll find some big bearish divergences on the weekly, with a bearish crossover happening on the weekly MACD right now. Those things are not good and generally would say that the stock market's more likely to have a correction. Not say a bear market's got to come, but a cooling off period. Things can always surprise. NVIDIA earnings are mega strong. Everyone just goes crazy again. But just looking at the US.
Fortunately, the altcoin market has been in a bear market for 4 years already. So it may not be as vulnerable to what is going on in the stock market or what will happen around the Bitcoin market, because at extreme points, even if those markets are correlated, it's much more difficult to maintain that correlation when one side of the market goes into extreme territory, either extremely overbought or extremely oversold, like in this case, for altcoins.
US stock market TA zoomed out, it looks toppish currently. Okay, short-term, local top, right? But for more immediate signals, watch for daily or weekly closes above or below 6,550. That will be the determining line. Now, I want to do a roundup with you on what the stock market experts are currently saying about the valuations of equities. Let's start with the dirty, nasty bears. But first, guys, do you want to come and meet me? Listen to awesome speakers like Michael Saylor. Well, go grab yourselves a ticket for the Abu Dhabi Bitcoin Conference. It's going to be a chance to talk to fellow Bitcoiners, commiserate over the lame markets and the bad prices. It's going to be a good vibe. The speakers are amazing. It's fantastic. Come to Abu Dhabi, and guess what? If you use the link right down below here, you're going to get 10% off your ticket when using the link. If you haven't been to these kind of conferences before, they're amazing for networking, amazing for meeting fellow people, and Bubble, the biggest he's ever seen. This guy's the guy who called the subprime mortgage a few years early, though. Propped up, expected a bubble, the biggest.
Yeah, bubble is a very tricky thing. Seriously, if you are not very well oriented in both the technology and what the stock market really does, like how the global economy is really how it really compares to it, how it really is using it, engaging it. This is quite a complex picture here, and it's so easy to get it wrong. So easy. Once I got it wrong, and then I readjusted. I corrected a little bit my views, And now I think, yeah, AI may still have quite a lot of room for growth, even though most of market analysts there, and even those good ones, they say this is already a bubble territory and it could pop every single moment. Yeah, of course that's possible, but AI has so many applications that they're still adding new ones. Like I said, I use it very extensively myself every single day, and it has value. It gives a lot of value, right? So maybe it will have to still wait several months before the bubble grows to that extent where it has to pop. But maybe it's I'm making here, let's say, um, a statement that maybe, just maybe, it's not really overblown yet.
He's ever seen. This guy's a guy who called a subprime mortgage a few years early, though. Propped up, of course, by accounting fraud, hyperscalers, Meta, Oracle, Microsoft, Google. Everyone's artificially extending GPU server useful life from 2 to 3 years to 5 to 6 years. He's calling BS, massively understating that depreciation is not a good thing, inflating reported earnings by billions. It's all a big fugazi with the AI thing right now, as well as rapid hardware obsolescence, insane capex with no real profitability yet, and even circular deals with NVIDIA, OpenAI, Microsoft. Kind of, this snake eating its own tail sort of thing. That makes the whole boom look artificially concentrated and fragile. His bet, okay, according to his most recent filings, huge short bets on Palantir and huge short bets on NVIDIA. Palantir is his biggest short position, by the way. He's literally...
And definitely, for example, NVIDIA's revenue does not match the evaluation of its stock market, that's for sure. But like I said, that does not have to be a nail in the coffin.
Going all in, personal fortune on AI cracking hard, just like it did in 2007, 2008. Palantir CEO Alex Karp called it batshit crazy. Alex Karp, what a character. Mr. Geographically monogamous. Anyway, that's a different story. If NVIDIA and Palantir drop 40 to 50%, Burry is going to literally make multiple billions off of this. It could be his magnum opus. If these stocks keep ripping, he gets obliterated again. Remember, Michael Burry told everybody to sell at the dead, cold, rock-hard bottom of 2022's bear market. Next up, Mike McGlone. McGlone has been on the bullhorn about, bear horn, maybe we could say, about the risks of mean reversion and deflation for a while now. By mean reversion, Mike is saying that stocks and cryptos are overvalued from the historical averages and therefore we're due for a correction back to those averages. Now, concerning deflation, Mike calls it post-inflation delation, and basically he's focused on the relationship between gold, crude oil, and copper. And he concludes that the relationship between these three commodities right now is signaling more downside risks for stocks and crypto. Now, our final bear, of course, is none other than Gold Bug Peter Schiff, who has been famously hating Bitcoin forever. Basically, Peter believes that the US stock markets are in a massive inflation-fueled bubble that's been fueled further with all the AI hype. That's a quick summary of the bears. There's more. You can find lots of bearish takes if you want. Now let's turn over to the bulls. First, Gigabull Tom Lee, everyone's Korean quant. So,
by the way, Tom Lee, he keeps buying up Ethereum. He didn't get scared off with those dips, and Ethereum dipped much more aggressively than Bitcoin, by the way.
So he's gotten a lot of his bullish calls pretty spot on over the past few years.
Yeah, that's true. He, like, pretty much whatever he said, I mean, he was he was right in a huge part. Whoever followed his advice, and could stomach that huge negative volatility in between from point A to B, then cannot be angry at him in any way, because yeah, in the long term he was right.
He's still singing the same tune. On November 11th, Tom Lee reiterated his call for a bullish run in stocks through the end of the year, citing all kinds of great tailwinds, a December rate cut, US government reopening, all the kind of stuff we talk about here on the channel all the time. And just a few days ago, Tom said this on CNBC.
To me, between now and year end, I'm pretty bullish on stocks. This sort of weakness in the first half of November was what we expected. But as markets rally, I think that's going to help propel Bitcoin to an all-time high.
Okay, Next bull, Director of Global Macro at Fidelity, Jurrien Timmer. Now, while he has become a bit more guarded in his bullishness lately, generally speaking, Timmer does a lot of pushing back on all the stocks and AI in a bubble kind of narrative stuff, arguing instead that while stocks are elevated, they're not at extreme bubble territory levels yet. They would need to go much higher. Our final bull here, James Thorne, he's the chief market strategist over at Wellington Atlas. So, essentially, Thorpe thinks that the current AI investments aren't even remotely close to bubble territory. We've talked about this quite a few times, not this guy's particular take, but that we'd have to go a heck of a lot higher in that earning.
Kevin pointed it out too, that bubble territory is between 2.5% of GDP to 5% of GDP, and now we are at most at 2.5% of GDP. So theoretically speaking, according to that measurement, AI just enters a bubble territory.
Earnings and valuations would have to really diverge in a much bigger way to say this is a crazy bubble. Anyway, he goes on because the amount of money that's been poured into the AI currently pales comparison to the benefits that AI will deliver. Interestingly, Thorne's also a big fan of Bitcoin. Right now, he's advocating for investors to buy this dip. So that's where our big bulls and big bears are at right now. Everybody's got it out. Everyone's laid it on the table, trying to see who's the biggest. So after looking at all that, it appears that the central question for equity valuations right now, in which of course this will have secondary effects on Bitcoin, is whether current AI valuations are truly overextended or not. People have big bets both ways. If we can get a handle on this question, then perhaps we'll get a better idea on where US equities are headed from here. Technicals are showing that maybe we got a local top coming in short term for stocks. The bulls are saying, don't worry about that bullshit. We're going a lot higher. The bears are saying the sky is falling. Here's the thing in investing, especially when it comes
They are saying the sky is falling. Yeah, that's true.
to stocks. 10-year time frame horizon people basically always win. There are no guarantees, obviously, in markets, but if you have long-term perspective, you're going to do well. You buy dips, you keep stacking, you'll be fine. The bears are right once in a while, and then they gloat about it for years on end.
Yeah, listen, one thing about bears is that there's not really that many bears that are, filthy rich, but there's a whole lot of bulls that are filthy rich, right? So that already tells you something.
Exactly how powerful Bitcoin is.
So let's hear out what one of the most legendary OGs of the space has to tell us. Da Vinci Jeremy, that Da Vinci Jeremy 15. I like that guy a lot. It's not like I agree with him 100% of the time. He has been wrong on many occasions. Practically every single cycle he doesn't sell at the top. He almost every single time he gets it wrong when it's about to end, when it's about to start. But he's a perma bull. He's a holder. He collects. His interest is to collect as much Bitcoin as possible. He's a Bitcoiner, but not a toxic one.
In today's episode, I'm going to show you exactly how powerful Bitcoin is. It's going to shock you. Good morning, good evening, good afternoon, wherever you are, whenever you are. Thank you for watching this video. My name is Da Vinci. I'm in the pipe 5x5, right? And although today Bitcoin is down heavy. I mean, I did a live show with Mr. M on the Daily Hodl show today, and it was down to 80K, right?
Yeah,
80K. 80K and 600 or something like
almost
that.
80K, yeah.
We're going to show you that on the charts, so
yeah, on Binance. So he had to watch it on Binance then.
stay tuned. Make sure you watch all the way to the end, and make sure you hit the like, hit the subscribe, and also if you're interested in trading,
subscribe, guys. Subscribe to the channel, but my channel.
make sure you head over to bybit.davincij50.
Listen, you don't have to subscribe to the Da Vinci's channel, because I will be discussing Da Vinci's channel here, and Lark Davis' channel, and some other guys' channels every once in a while. So yeah, instead of giving 3 times subscribe to every single channel, you can just give 1 subscribe to me, and that will do.
Or
I'm joking.
check out the links in the description below, where you can find all kinds of exchanges where you can actually make a lot of money by just clicking through, right? They'll pay you out some cash. If you have large amounts of cash, You can just deposit, and then they will give you an opening bonus. It's huge, huge. Okay, with that said, right? Why is Bitcoin so shockingly powerful? What is it that provides such immense power for humanity? Well,
To be honest, what I don't like so far about the daily candle on Bitcoin is that the candle body of today's candle, as you see, is red and is below Friday's candle body. That means the selling pressure is not gone yet for now. I mean, let's see how it goes later on. But the longer it stays like this, the more risk Bitcoin runs, it will still fall lower.
well, most of you don't read books, and most of you don't understudy history of money. That's understandable because your school doesn't teach you that, and you never really thought, well, shouldn't I read a bit of history about money? It wouldn't have occurred to you to do so. But there is a long history of money, and what happens when we use good money, such as gold and silver, and bad money, such as the paper money we're using today, which they can print. An example of bad money use is that it creates more and more corruption in society. Only the most evil people in our society truly spend the time to understand what it is and how to steal it and how to print it. Basically, same thing, right? From you, right? And so it's basically theft, which you
This kind of educational video today from Da Vinci.
can't understand. These are honest.
Let's go to timestamps. Drop to 80k, why Bitcoin matters, good money versus corrupted, how elites steal through bad money, history shows, Bitcoin gives you wealth, how Bitcoin prevents future, why Bitcoin creates a better future, chat hits parking garage levels exactly. Okay, let's take a look at this one.
And maybe touch this level, this parking garage. We held this parking garage for a little bit and then we failed. So it looks like we have another parking.
He uses a lot of stuff. There's a lot of going on this chat. I rather discourage you of putting so much stuff on a chat. Why? Because it gives you way too much information noise. If you use algorithms, also try to keep it simple. Don't overlay 1,000 indicators on what's going on, because you will oftentimes run into those indicators showing contradictory things, and you'll have a very bad time of selecting right signals.
Garage downward movement here, and let's see what happened. Oh, look at that. Just like that, boom, we are exactly at that level, exactly as predicted. And now we're bouncing off another parking garage level, exactly as predicted. Boom. Man, markets move exactly in just chunks. So again,
So one of the psychological effects of something like this, like once we have a sell-off, right, a spike of volume, and a candle sitting on a tall leg, on a tall wick, and then a follow-through of even a mild red candle, the psychological damage already done here is that we tried to defend this level, but seems like it was not enough. So more and more people start to doubt in this thing actually holding on, and they move away their buy offers, right, in the order book. So they just make it thin and make it easier and easier for price to penetrate lower, theoretically speaking. But on the other hand, the more people bet in derivatives market on the price falling even more, the more liquidity is to scoop up by market makers. So I think this one is the biggest motivator for the price to actually reverse in a violent fashion.
You could end up with another chunk down, the exact same size.
Guys, don't forget to subscribe to the channel. Subscribe. And also know that every single Friday I draw one random Solana address with 0.1 high tech on its balance and send their one full high tech. Right, high tech is a coin that I have chosen as my personal stock market. Is this one here, and yeah, well, this is the only project that I promote on all of my social media, and it will stay that way. That way, you will not ever see me promoting any other project. So that is why, since my channels are still very small, this one has a lot of room for growth, and at some point it will be tightly correlated to how my popularity performs. For now, there is a huge bullish divergence in between how this chart performs and how my popularity grows. So I expect literally any day it can abruptly explode. So just get yourself like, I don't know, $1, $2 worth just before that happens, just in case I'm right. If I'm wrong, you're gonna lose $1 or $2. If I'm wrong, if I'm right, you may make, I don't know, $200 out of it, $300. I think win-lose ratio here is absolutely crazy. That's my honest opinion.
Let's hope not. I think we should see a bounce here right now. We should. And let's see. Let's see if we get all the way to 75, which I was calling for, right, for a long time now. So 75K is what the chart's next parking garage level. So, Jesus, let's see. We're far away from the EMA ribbon, so that is also a positive on the 4-hour and on the daily.
Yeah, my question is, if we fall to 75K, will people still be shorting it like they are doing now? Because at some point, the lower we are, I mean, market makers run the risk that again a part of the bulls will flip part of the bears will flip bullish at lower levels. So it's not like it's guaranteed the lower we go, the more bears will add to their shorts, right? So this now could be that perfect opportunity to scoop up this liquidity before it disperses.
So and the 200 period moving average, so that is also,
and that means price going up instead of going lower.
Positive. We could also take a look at the weekly chart, and you can see that the weekly chart with the Bollinger Bands is super overextended. So we could end up bouncing a little bit here too.
Yeah, but Bollinger Bands, whenever you get that kind of extensions, the price will want to come back to the average, make up for what just has happened, recalibrate a little bit at the level to find itself as a little bit closer to the midsection of Bollinger Bands. That is why it's kind of a good tool. To track how markets should react to a given move, especially if the move is violent. But it's not guaranteed. Sometimes we see that a price of an asset falls out of Bollinger Bands, and instead of price, let's say, readjusting to Bollinger Bands readjusts to price.
And to the least to the 88K, Jesus, to give us a little bit of relief.
Funny. This is funny how he comments on it. Jesus.
Rally, man. Come on, man. Jesus. A little relief rally here. Jesus. Look at the weekly.
Well, I get him. Because he's a holder. He probably has a little bit too much of Bitcoin to be able to sell it before those large corrections occur, because he will be he'll be overpaying in spreads. Like, you know, me, I trade with highly likely a fraction of money that the Da Vinci has. So that's why I can afford to, you know, jump in and jump out. So here was my last trade, as you see, my last trade, which was a lost trade, but still it saved me a lot of money because my last exit was at $101,000, right? So in the most dramatic moment, it was minus 20%, and now it's minus 16. And I actually trade on two intervals, one 15 minutes, so which is this one, and one hourly. And on one hourly, I got exit even earlier. Right? It was also in a straight, very similar loss, but it was at 108,000. So according to this one, minus 20, almost 22% as of now, and in the most drastic moment, it was minus 25%. So yeah, it definitely saved me a lot of headache. But yeah, in case of Da Vinci, I mean, he probably he does not have that comfort
RSI has gone negative.
because this market is not as liquid to handle, you know, in the same manner. I don't know, thousands of bitcoins, let's say, or even hundreds of bitcoins.
Right? Oh my goodness. Absolutely devastating situation here. But it is what it is. So if you're looking to buy long, I think you should I think, well, at least I am. I don't know if what you do, whatever you do, whatever you do. I'm looking to buy even some more in this area, but I've already started my buy.
Right now, to short the market, to short the Bitcoin market, the altcoin market, I think is very, very risky. And I think this is what market makers are trying to convince you to do. That the only thing you should be doing right now is to short it, just so they can grab all of that liquidity sitting in your shorts, because it will have to end up in a huge short squeeze. There is, like, market mechanics does not allow it for any other outcome.
In on this lower level now that we are here and looking to offload. This is just a short-term buy so that we could offload maybe at the 88K. Hopefully it works out that way. No promises from the management. You do whatever you want to do when it comes to trading, and yeah, and make sure you head over to x.dj15.com where you can choose your favorite exchange, deposit some money, right?
You see, so you will never hear me doing that. I will never be telling you to deposit money to any exchange. I can mention about exchange buying up my token here, right? Because so far a few exchanges already asked me if I want to promote them, and all of them, they heard literally the same. I told them, you want me to mention the name of your exchange on my channel, you have to buy up my token and burn it, and then I will be talking about your exchange in that context, that you support my project. Then definitely, let me tell you, definitely people will feel a nice warmth in the chest then when they will hear the name of your exchange, you know, here or there. So yeah, so far nobody has agreed to it, but worry not, that's only a matter of time. And that's why I think it's very, very worth to be in high-tech meme coin, because those guys, they don't pay peanuts. They overpay 10 or 20 times. I know it for a fact. I've been in this space for 11 years. I know how much they pay. They overpay, let me tell you. And this is a very tiny market, very liquid yet. So whatever they insert here, it will result in hundreds, if not thousands percent of pumps. So just be here before them
And make some trades free. You get free money too. They'll give you free money. Deposit. Enjoyed today's episode. I know I.
All right, thank you, Da Vinci. So he focuses only on the chart. He does not see, he doesn't consider how the liquidity is distributed right now in the order books, which is not entirely incorrect because order books are the easiest to spoof. To spoof order books costs literally zero. So here's Alessio Rastani. Also, Alessio Rastani is cautiously bullish because of the death cross. Why everything is selling off? This could be interesting. This is Andre is not a typical crypto folk. He talks about business and economics. But you know what? Okay, let's hear him out. Let's hear what he has to tell us. There is that. Once again.
So this is a quick emergency update video about what's happening to the market because AI stocks are selling off and Bitcoin is selling off and it's sort of leading the way for this huge correction. Now, even if you're not interested in Bitcoin, I think you should still watch this video because Bitcoin tends to be a leading indicator for what's about to happen. And Bitcoin already started to go down before the rest of the market. And there's a couple of different theories of why this is happening, and each of them is extremely interesting. But arguably the most interesting one that I've seen is coming from this technical point of view. And again, credit to Benjamin Cowan for this. If you don't follow him, go check out his YouTube channel. It's fascinating. And
yeah, Cryptoverse.
One of the most interesting things I've learned from him is this. When the price of Bitcoin falls below something called the 50-week moving average, the bull cycle, aka the good days, are over. That 50-week average price for this cycle was roughly $103,000, which we crossed a couple weeks ago.
Well, listen, multiple times it has happened that there was certain regularity. Let's say the Bitcoin market was respecting, and then it breached it, it trashed it. Everyone thought it was all over because it has never happened before. And then we saw a huge comeback, right? And we continued the bull market. So that is why whenever you look at someone showing you something that has never happened, like for example, or it continuously happens, just don't give it 100% of benefit of a doubt because Bitcoin has a record of fooling you into thinking that there is a certain trick to understand how it works and how it will behave every single cycle, right? It has a record of doing that.
And that was enough to cause a cascade of selling from investors that pay attention to this stuff because to them, the prophecy has sort of been fulfilled, right? This also
good point.
Happened while everything else was still kind of looking good. We got regulatory clarity, more Bitcoin treasury companies buying, positive news about Bitcoin legislation. We had Harvard University buy hundreds of millions of dollars worth of Bitcoin.
I mean, generally speaking, bull markets, they end with popping champagne bottles. That's for sure. But the sentiment, like, since we went up to 100, let's say, vicinity of 120k, the sentiment is nowhere close to that stage. We did not see any sort of euphoria in any sort of meaning of that word. So that is why, allow me to quickly turn on alternative.me once again. As I say, I closed it. Sorry for that, guys. Okay, here this bug goes. Yeah, this one still shows 11. So apparently it's 11 today.
Everything around Bitcoin was saying this thing should be going up, but it didn't. So the question is why, and how does this affect everything else? So in this video, I want to share with you all the super interesting theories about what's happening. And let me just start right here. I mentioned this one before, but I want to repeat it because in the world of economics, in the world of investing, there's two major forces that try to explain what's happening to the world. The first one is the technical force, technical analysis. The people that look at the chart of an investment, they draw some lines, and then they're able to guess what's going to happen to the market. Okay, that's force number one. The other force is the macro force. And this is the force that looks at the bigger picture of the world. Like, for example, what's happening geopolitically speaking? Is there a threat of war? Is there a change to politics? It looks at the central bank level, at the Fed, at the interest rates, monetary policy.
So again, here we are looking at what is the overall sentiment around crypto, right? We check, let's say, those most viewed crypto influencers and you listen to what they've got to say, what's their opinion about current market situation, and we try to find something to take away from it.
Things like that. But one of the biggest questions that we just can't answer still in the world of economics is, which of these two forces best explains our reality? So using this point of view, I want to help explain the theories of what's happening so you can hopefully get a better idea of what's about to happen next. So with that said, let's get into it. Hi, my name is Andre Jick. Hope you're doing well. Come for the finance and stay for the market. So let me start with the technical side of the force because I actually think this is one of the best explanations for what is happening. Again, this is something I've been following very closely and I'm impressed with how accurate all of this has been. And again, this is full credit to Benjamin Cowan for sharing this on his YouTube channel. Now, the whole idea behind technical analysis is that the stock market, or any market in this case, are just social systems. And when they create a certain pattern, it can trigger certain things to happen. Now, I'm going to use Bitcoin as an example, but this is true of all investments people look at. First, let me show you this right here. This is kind of mind-blowing. It shows you how long it took for Bitcoin to go from the bottom of the market to the top of the market. It took roughly 1,050 days for this cycle. But what's also very interesting is that the last cycles, cycles 3 and 4, also took the exact same amount, 1,050-ish days. Now check this out. I know it looks complicated, but this chart shows kind of the same thing. Bitcoin's followed the same pattern, but alternating from the all-time low to the all-time high, and then all-time high to the all-time low. So for example, in 2015, from the all-time low to the all-time high, it took Bitcoin 1,050-ish days. And then in 2017, from the all-time high to the all-time low.
Well, I would like to call your attention to the fact that, like for example, last cycle, for the first time we did not have low of top. Everyone was expecting low of top. It was double top. For the first time, we breached 200 weekly moving average. That had never happened before. We fell out of the rainbow chart that was always working. We completely crashed stock to flow model. We went below previous all-time high, which also never had happened before. So this cycle, we already did all-time high before the halving. So I think it was an early sign telling us that this cycle is going to be different early on, right? So every single next cycle is slightly different than the previous one, or sometimes even vastly different, just like the third cycle was. But in this one, I think the huge warning sign, early warning was all-time high before halving. That was the message. Watch out, because this cycle is going to be different. There's much more capital, let's say, much more investment, much more, let's say, in institutional engagement in this market now than it happened previously. Even, I don't know, even on national level here and there too. And so that's why I don't really think we can use, previous cycles. I don't think it's previous cycles scale to how this market looks right now. I think it's going to be a huge mistake if anybody thinks that because, previous bull markets lasted over 1,000 days and the bear markets later lasted around 1 year. It will, the same this time around. I think this will end up in a huge mistake, because market is a zero-sum game, and if everyone agrees upon something, it means there is little money to win there, because there'll be only few people against it that, after they finally turn out to be wrong, will have to finance the price of all of the rest that were right. That is the consequence of zero-sum game. So I think there is way too much of a consensus upon the start of bear market here.
Oh, it took Bitcoin about a year, 364 days. Then in 2018, from the all-time low to the all-time high, it took again 1,050-ish days. And again, from the all-time high in 2021 to the all-time low, it took 364 days. Well, guess how long it took us to go from the all-time low to the all-time high in this cycle? 1,050 to 1,064-ish days. Which means if this pattern continues, we should reach the all-time low 364 days from our all-time high, which happened on October 6th of this year. That means we are on around October 5th, 2026, when Bitcoin could reach the all-time low of this cycle. Now, regardless of what you think about these kinds of things, I think it's extremely compelling, and I don't think we should ignore it. That's just technical force explanation number one. There's a second thing we should look at. Now, before I explain it though, here's something else I've been personally doing to keep stacking sats while all of this plays out with the Gemini credit card, the sponsor of this. I use it like any regular credit card and cryptocurrency, 4% back else. It adds Bitcoin to my who earned and held their Bitcoin credit card /on for sponsoring called price. When Bitcoin is in a bull cycle or a bull market, it has always stayed above that line. But when Bitcoin's price went below that 50-week moving average level, that meant it was the end of the bull cycle and the beginning of the bear market. And we broke below that price point for a few weeks in a row now, which is obviously not good. That price point is $103,000, which for a few weeks now we have been below that point. Now let's take a look at the macro force, the big picture stuff, because this theory says that what's happening to the markets right now has nothing to do with what I just explained. Instead, there's a bigger force, an invisible force that moves the markets to behave the way they do. And according to this theory, this was all because of what's called a change to global liquidity. Here's example number one, Japan. Why does Japan matter? Well, it matters because remember how the world is structured. We have the United States, right? The police officer who controls the supply of money, exporting mostly the dollar and technology. But then we have China, which is the global factory of the world. It makes all the stuff for everyone. And we had Japan as the biggest interest-free lender because their interest rates were zero, actually negative, which meant something called the carry trade was possible. Long story short, investors borrow Japanese yen at low rates, they take that money and invest it somewhere else for a bigger return like US Treasury.
Yeah, I explained it many times on this channel what the Japanese carry trade consists of.
Bonds. Guaranteed difference on the spread. That's called the carry trade. But long story short, it was a very easy and a free way to make a guaranteed return on your money. But now that's changed because Japan's interest rates are going up, which means no more borrowing free money and a change of incentive. Meaning money right now could be leaving dollar-denominated assets and going back to their homeland where interest rates are high enough to make sense keeping that money at home. Now, yes, technically US interest rates are higher than Japan's, but once you factor in the cost of converting yen into dollars and back and forth and the currency hedging costs, the yield advantage basically disappears. In some cases, it even turns negative. So whether you're a Japanese pension fund or a global hedge fund, it now makes more sense to sort of unwind those trades and to sell those dollar assets and to bring the money back home.
Well, are they rising rates? I don't think they're rising rates. Let me check it. Japan. Japan rising interest rate. I don't think they're rising rates. I think he got it wrong. Yeah, see, as of November 22, BOJ has not raised interest rates recently. The benchmark policy rate remains at 0.5, where it has been since the BOJ hike from 0.25 in January. The BOJ ended this negative interest rate policy in 2024 and has been gradually normalizing monetary policy. Key moves include rising rates. Listen, Japan is highly dependent on the United States because they are simply afraid of China. So they want to have that, global police support in form of United States. So, however, actions of Japan harm the stock market of the United States. If the government of the United States does not want it, they will just send a message, just stop it, because you are screwing us. You're screwing us up, right? But yeah, so there is a little bit of inaccuracy in what Andre is talking about here in this material, as you see. So that's why it's very important to not ever, not ever trust 100% to anybody commenting about the market, because people get things wrong. Sometimes they hear something wrong, or they read something wrong. Later they believe, that's the truth, and they will be explaining you, laying out in front of you something that is not entirely accurate.
That is a very big deal. But there's also a second change to liquidity, and it should be good news technically, but investors perceive this as bad news, and here's what happened. The Fed announced that on December 1st, they'll be ending QT, or quantitative tightening. Now that is good, but it's also technically bad, because when the Fed ends QT, it usually means they are seeing signs that something somewhere in the financial system.
That's true, but historically speaking, 100% of the time when they ended QT, altcoin season kicked off.
Is starting to break, or at least is fragile. Of course, the Fed is not going to tell us that, so they're like, we're just doing this to be ahead of the curve so we don't end up causing a recession. But investors are like, well, we don't really believe you. Circular funding in the AI bubble, right? The job market is slowing down. Consumer spending is mostly propped up by the wealthiest people. We have a K-shaped economy. That's not good. But regardless of what the reasons are, the point is, risk assets, which are things like Nvidia, things like Bitcoin, they start to sell off because investors are like, I'm just going to sit this one out and wait until all of this cools down. And again, it just so happens that Bitcoin is the canary in the coal mine, as they say. It's the first thing to be affected. Why? Because it's the easiest investment to sell. It can be sold on weekends when the markets are closed, so it reacts first. By comparison, if you're a real estate investor, you can't just panic sell in a day. So some investments, because they're easier to sell, aka more liquid, they move first, which is arguably why Bitcoin started going down before the rest of the market. So what you're seeing in the technicals, these price charts, that is just a reflection of investors anticipating all these changes and all their worries, and that's the macro force explanation. Now there's a third theory that's neither technical nor macro, it's more human psychology. It comes directly from the Bitcoin community themselves. Fun fact, Bitcoin was allegedly on the Epstein list. Apparently, there was funding that happened in 2015, which doesn't look good, but it ties into this much bigger story. So here's what happened. What most people don't actually know is that for the last few months, Bitcoin's been fighting itself over the idea of what it's supposed to be. Like, what is Bitcoin is the question. To be or not to be, right? And
it's actually very easy to say what Bitcoin is. It's just decentralized money, a money independent of any government, and a store of value, of course.
And most OG Bitcoiners believe that Bitcoin is supposed to only represent money. That's it. But the newest version of Bitcoin, run by the core development team, which was allegedly funded by some sketchy people on that list, made an
But the core developers, they destroyed their own reputation because they are trying to introduce a change that will literally jam the whole Bitcoin network within 10 minutes. So why? Because they taken off a limit of how much data you can attach to every single block. There was a limit before in Bitcoin Core software. They have taken it off, so that means you can attach, I don't know, 100 gigabytes of data to it, meaning that literally no single, let's say, node, 100 terabyte even, no single node that normally is run by users can handle that amount of data. And that opens doors to attack Bitcoin network, like literally stop it and make it stop in 10 minutes. So that's about, Bitcoin Core developers. They should not be taken into account anymore. They completely, they deleted their reputation from the scene with that move.
update that got rid of an old data restriction. It's called op return. Now this feature
Exactly, op return
is what allows people to attach a piece of data to their Bitcoin.
Yeah, that's true. And some weird things had been attached in the past to those transactions, but there was a limit. There is the data limit for it. Now there is, core developers, they want to popularize version of software where there is no limit to it. So as I explained, that would prevent Bitcoin nodes from working anymore. It would stop the whole Bitcoin network.
Bitcoin transaction. Now this was always possible with Bitcoin, but this update increased the size of how big that data could be. So now this new version that's being pushed says Bitcoin isn't just money, but data of all sorts. Pictures, videos, whatever. It's an immutable data.
It's a database, yeah.
Data transfer protocol. Now, a lot of Bitcoin investors are really upset about this because it now introduces a new way to attack Bitcoin. Because now, if someone wants to, they could attach pictures or videos to a transaction that will forever live on the blockchain. The problem with that, though, is if someone were to attach something illegal, like the people who might have been funding this project for their own self-interest in 2015, allegedly, that makes it potentially unusable from an ethical and a legal point of view. How? Because this opens the door for people to spam the blockchain with things like NFTs and memes and other random files, which over time not only increases the block size.
The ability to attach data to a block is very useful because that way you can create different protocols on Bitcoin blockchain, and make it much more versatile. So overall it's actually, there's much more positive to it than negative. But yeah, things like he's talking about are possible, and they will be always possible on blockchain. So it's kind of an argument that that you should not use a knife because you can stab someone. So you know what I mean? It's just not smart.
Making it harder to run your own node and to be decentralized, but also changes the meaning of what Bitcoin is supposed to be. I can make an entire video talking about this, but that's how you can
You can make an argument that Bitcoin is money because it has that optionality, but it's mainly money. Actually, Bitcoin is not really good for anything else because it's just too slow for it.
basically co-opt Bitcoin from the inside. That's how you attack it. Now, whether you personally care about this story or not is not really the point. The point is, this is another possible explanation for why some Bitcoin holders decided to sell. They're like, you know what, I'm gonna sit this one out while Bitcoin figures itself out, and that fear is causing them to sell in addition to all the other things we just explained. And the fourth theory that sort of explains everything that's happening right now sort of ties everything together. And full credit to Jordi Visser for coming up with this, but his theory says that Bitcoin is having its equivalent of an IPO moment. Now, an IPO happens in the stock market. It stands for initial public offering, and it's when a company goes public and investors could buy shares of that company. But Bitcoin's obviously not a company, so what does that mean? What it means for Bitcoin is early investors are cashing out. They're taking their profits because for the first time in history, they actually can. There's enough liquidity. There's enough money now to sell and get their money out. But hold on. If Bitcoin's going to 1 million, why would
They always could, and they have to do it, one shot. They could, do it slowly, inject that, let's say, supply into the liquidity step by step. I don't think that's something recent to them. And they could sell also large amounts of OTC. This market always had a large OTC desks, so I wouldn't say that's actually how he portrays it.
they ever sell, right? Well, it's because what you have to understand is that there are people that walk among us right now, and you don't know who they are. I mean, you might be one of them, but some of them are already billionaires.
And that's good. You should not know if someone is billionaire or not.
And here's a recent example of a wallet that's been cashing out hundreds of millions of dollars worth of Bitcoin. Earlier this year, there was also Galaxy Digital, which processed a $9 billion Bitcoin sale for just one person, one wallet. At that point, would you care if Bitcoin went to 1 million? No, I'd be happy with 9 billion, thank you, right? But the point is, if they had tried to sell their investment even just a couple years ago, they could have crashed the entire market. They wouldn't be able to get what their investment was worth.
But that's true pretty much for every single market. Like, there is no one single market that can withstand the selling pressure of large hodlers, especially if they do it with one press of a button. So again, that's not really a valid argument.
Because there wasn't enough demand.
By the way, this is something that people throw at me, myself, and high tech, right? That because I own large supply, so it's dangerous to own even a little bit. And I point to the same thing. There is no market that can withstand the selling pressure of its large holders. If they sell it in one shot, pretty much, you name it, whatever class of an asset, whatever asset, if they sell it one shot, they will crash the market. And that applies to literally every single class of asset in the world. So, but I understand it's something that can easily escape people's attention. It's an argument that's very easy to use, let's say, in a conversation, but it's a totally invalid one.
Man to buy it. Just because you have $1 billion worth of something on paper doesn't mean you'll get $1 billion for it. But
yeah, because there must be liquidity for it. I always explain to people. Sometimes they look at high-tech's market cap. It's 768 million. And they say, oh, it's a large market cap. And I tell them, bro, but if you have 1 grain of sand, 1 million grains of sand, and you sell one for $1, does that mean you have $1 million? No, not really. So market cap is a totally false parameter. What counts is the liquidity. And in the case of high-tech, for example, that's the factual market cap of this coin, and that's 16,000, as you see. So very, very, very tiny.
now, thanks to Bitcoin ETFs, there are companies buying Bitcoin, there's countries buying Bitcoin. And for the first time ever, those OG Bitcoiners can now sell $1 billion worth of Bitcoin without crashing the price. So what we're seeing is a transfer of wealth from the few early investors to now the masses. This phase is what we're in right now. It's slow. It could take a whole year for us to reach the point of those people selling out of their investment, but this is what it looks like. And it's a long journey down. Again, it could take us 364 days roughly. So that's Jordi Weiser's theory, and this is Bitcoin's IPO. I thought it was a very interesting and very credible theory. Now, if you made it this far, here's what I'm personally doing. I am not selling my Bitcoin. I think Bitcoin will bounce back regardless of what happens to it externally or internally, like the new update's been going on. And I think the financial incentives of Bitcoin will always realign themselves to fix any issue that it comes across. But I'm also not selling stocks. I'm not touching my long-term portfolio at all. My dividend portfolio is still paying me every single month, and if we do get on a sideways market or a down market, the portfolio should do pretty well.
Okay, so we already have gotten the final conclusion. So he's not really long-term bearish, but short-term predicts that those angles he mentioned could ignite a little bit of more selling pressure. It could ignite a little bit of more fears, surrounding Bitcoin, and that's perfectly fine. Technically speaking, Bitcoin is getting really oversold. Altcoins are brutally, violently oversold, and when we compare the two, when we put it against fundamentals, what is going on outside in the global economy, in the US regulatory space, I think December will have to be the month, especially for altcoins. Bitcoin probably will recover. Will it continue bull market? We'll see. I still think it has a very thick chance of reaching 150k. I think it's very possible. A move like that, it wouldn't be anything extraordinary for this market. Definitely not. But what I'm most certain about is the altcoin market, that it will at some point, like within very foreseeable future, like days, maybe a couple of weeks, it will stand up from the chair it has been sitting on for 4 years, and it will start sprinting, because there's literally free money for the large players to put their hands on. So I don't think they will be ignoring it. Okay, guys, share, like, and subscribe. Don't forget about that part. I live stream every single day. Don't forget about high tech, the only project I promote here, the only meme coin I promote here. Hence, this is kind of a stock market of my social media. The more my popularity grows, the more this one will adjust to that growth. So this is very early days. I think there is huge potential in this project. I think the current evaluation is very, very cheap, turbo cheap. I think this is literally the easiest trade on the whole of internet right now. First mover advantage, first project like this. Nobody ever has done it in this fashion. And same as Bitcoin was first, of its category, and that is why it is worth that as much as it is right now. So, literally, high tech followed suit that exactly pattern. So you'll find in the description section of this live stream a tutorial on how to acquire it. On top of that, every single Friday, from all of the high tech holders, which is for now it's a very small number of people, I pick one Solana address that has at least 0.1 high tech, and send there one whole high tech. So at least it's worth to own 0.1 high tech, just so every single Friday you give yourself a chance to win a high tech, right? One full high tech. So yeah, I think that's interesting. Okay, guys, that will be it for today. Thank you for the time. I see you sometime soon. Cheers.